What's going on, guys? In this video I want to show you guys exactly how I'm marking out my Fibonacci retracements. Typically I only adjust them maybe once a week, if that. It depends on the range of the week. So again, it doesn't really matter when you draw them, it doesn't matter how you draw them, but what I use, okay, and maybe this can help you guys, and this is what you guys kind of see on screen sometimes when I jump into live calls, is I start off with the 4-hour time frame, because that way it's going to give me at least a few, previous days that I can kind of look at. And all I'm basically trying to look at is what are some of the previous swing highs, what are some of the previous swing lows. Okay, so we've got the big gap down that we had over the weekend when we Trump released the tariff plan, and the trade war was going to happen, this, that, and the other. We've had a strong recovery to kind of fill that gap since then. So just by looking at this chart, I can see that I've got a previous swing high here, okay, going back to last week, and that gap down, that low wick, is that, as of now, is our previous swing low based on a 4-hour time frame. Now I can drag it all the way over here to last Monday's low wick, and I might do that sometimes if it's pretty close or similar in range. I'll drag it there, and I'll kind of show you exactly what it looks like. So if I was to take this swing low from the weekend, and I put my Fibonacci retracement, what I'm going to do is start at the low, and I'm just going to drag it all the way up to the previous swing high. Okay, and as soon as I click, it's going to drop my Fibonacci retracement, and now I'm going to have some key levels that I can now play on a smaller time frame. Okay, and if we kind of notice one thing here is, look at the gap down, right? Look at the gap down, and look at where it kind of, all in all, from the low to the high, where it actually played out, where the bounce started to occur in between these two purple lines, which is your golden pocket. Now, if I was to drag it down to this previous swing low here, you're going to see almost an even better bounce from the GP, which is the golden pocket. So if you're not familiar with golden pocket, just do a quick Google search on what the golden pocket is. And again, it's nothing like revolutionary. Like, I'll just pull up the definition of it right now. What is the golden pocket in Fibonacci, right? Let's get you guys the true definition here. The golden pocket refers to a specific range within a Fibonacci retracement level that holds particular importance for traders. This range typically falls between the 618 and the 65% retracement levels, which are directly linked to the golden ratio. So it's a very strong area. Okay, like let's just leave it at that. It's a very strong area where if something is pulling back, you can kind of start to anticipate that maybe you might get a bounce. Okay, if you get a bounce off of the golden pocket and then you lose the bottom of the golden pocket, you're typically going to come down to the bottom of the range and at least retest the most recent lows. Okay, so in this particular scenario, if we were to drag it from last week's highs to last week's lows, you can see that the gap down took us into the golden pocket, and now we've had a little bit of a bounce. Notice this bounce, how when it pulls back, look at where it stopped. Look at where the body closed. Guys, right here at 21,362, we had a Fibonacci retracement level on the 4-hour time frame, then we got a nice bounce. So all in all, the chart still looks bullish. It's had a more than a 50% retracement, which typically means that there could be some continuation to the upside where maybe we're going to test the upper part of that range. If this was going to fail, then more than likely this dead cat bounce here getting into this gap fill would have trickled sideways and then started to fall back. Now, the bulls are not completely out of the water, but we can lean a little bit more emphasis into the longs now that we're in the upper portion of this range here. Again, 21,680 into 21,965 would be the upper pocket range here that I would look to be trying to target. So again, how do I use this on a day in and day out basis? Well, look at my 1 minute time frame. Notice how I've got these levels, and notice how on the 1 minute time frame, how once we start to clear over this Fibonacci retracement, we have some consolidation, few back tests here, and then we really start to push up. And notice where we stop at the upper range, and notice where we pull back, right? So I use them as ranges. So even when I'm drawing my, flag patterns, or, I'm looking at 5 minute, 1 minute, 20 SMA plays, I'm correlating that with the range. So in this particular scenario, I don't really want to go long right here at the resistance level. Okay, I'd rather it pull back some And then maybe, you know, if I was going to go long, I'd go long like over a flag pattern like this, because at least I can play that into my Fibonacci retracement. Okay. Same thing for, you know, a short. Notice how once we start to pull back, you're going to see, you know, a few flag patterns here to the downside. Well, you know, can we kind of take these patterns to the downside? Sure. If you're coming from the upper portion of the range and you know you've got a lot of room down to the bottom of the range, might give you a little bit more confidence to kind of play it down, right? So maybe we get a little bit more hesitant going long up here at the range until we at least close and break over that. And then maybe we start to look for the shorts. If we just get into a new range, and then maybe we try to stick with the longs. So that's exactly how I'm playing my Fibonacci retracements. That's how I'm using them. I start off with the 4-hour time frame, and I typically like to look at last week's range, swing a high to low, and then I like to just place them on my chart. And throughout the day, when I'm playing the smaller time frames, I like to, you know, keep them included, so I, you know, gives me confluence on where I should be looking to sell or where maybe I should stay away from trades. And it just kind of gives me trading ranges throughout the day, more importantly, right? You know, if I'm smack dab in the middle of a range, it's typically I'm a little bit more hesitant to take trades, you know, because I don't really know, are we coming to the bottom? Are we going to the top? I normally like to take trades at the top of ranges, or I normally like to take trades when we break through and get into new ranges. So I hope this video helps you guys. Again, see you guys all on the trade floor. I'm trying to make as many videos for you guys as possible that you guys can watch very quickly and implement on a day in and day out basis. Because again, remember guys, you're the one who's clicking the buttons, right? So you've got to click the buttons. You've got to understand why you're clicking the buttons. I know it's great to listen to me talk or to watch my screen or to see me charting, but all in all, ultimately, you have to start putting a lot of this stuff on your charts, and you have to start going through it so you fully understand it and get that experience of actually using these things versus just looking at my chart when I do a screen share and saying, oh, okay, yeah, I see his chart, you know, but you see my chart, but did you understand how I got to where I got with the chart, right? So again, start implementing this stuff, start using it. And again, I'll see all of you guys on the trade floor.